Hey guys, welcome back. How are you all doing today? So it's another session of our top trade setup and market analysis. So let's start from the very top. Okay. So last week we still have the U.S. government shutdown ongoing. So we had little to no actual fundamentals last week. However, this week we have some CPIs coming this coming week. Okay. From Canada, we have the usual CPI month on month, the median CPI, and the trim CPI. In the United Kingdom on Tuesday we have CPI year on year is actually expected to come higher. So we're expecting a rally on the price of pound, okay, come next week. We're expecting a hotter inflation in the United Kingdom. That is very interesting. I think the same goes for for Canada, just that it is expected to literally come more like the same, okay, no serious improvement from that aspect of the economy in Canada. So watch out for that. On Thursday, same as Monday, we have flat data coming, okay, no high impact data coming, in my personal opinion, okay. If you're the kind of person that like the yellow folder and the brown folder, then maybe you get something on Thursday and Monday. But for me, nothing really interesting. And then on Friday in Europe and United Kingdom, which is still part of Europe, okay, we have PMIs, okay, the manufacturing PMIs and the service PMI. We have them coming in Germany and in the United Kingdom. However, the elephant in the room, which might likely not gonna get released, why? Because of the persistent government shutdown in the United States. We have the core CPI month on month, and the CPI year on year. It's actually expected to come literally the same. There's no forecast like that, especially for the CPI year on year, which is the actual inflation in the United States. Okay, so which still remain at 2.9%, which is very fair. And by 2:45 p.m., we have the flash manufacturing PMI and service PMI in the United States as well. So watch out for both of these. It is very important because anything can literally happen in the market if these data get released. Well, I'm not sure, but as at this time that I'm recording this video, as you can see down here, the US government shutdown is still very much ongoing. All right, so just so we're clear on that. Now let's take a look at the US suppressimeter, which is the measurement of the United States economy and the strength of the currency. Like that. It's not just about the United States economy; it's just about the G7, the G7 currencies. Okay, it's actually 8 right here, but they call themselves G7. Very weird sometimes. All right, right here we have the United States at 56%. We have the United Kingdom at 40%. We have Europe. Okay, we have Euro at 20% weakness, and we have Yen also at 56%. And you can see last week we saw some very decent strength come to the Japanese yen pairs. Okay, aside the Swiss yen. Now something significant or something very interesting happened last week. Okay, which is when it comes to Japanese yen and Switzerland. I'm talking about the actual what's it called again? The actual safe haven asset in the market. Okay, so we have Switzerland at 0% flat right here, and we have Japanese yen at 56% strength. The same thing with the United States dollar. Now in Forex 101, we were taught that where you have a currency strong, okay, in Forex 101, what we were taught was when the base currency is stronger than the quote currency, that particular currency is expected to do what? To rally, right? So like USD CHF last week was expected to do what? To rally. But what happened? Last week we saw a massive dump starting from Tuesday. That is quite interesting, right? When the base currency is also stronger than when the quote currency is stronger than the base currency, that particular currency is expected to do what? To fall, okay? All the way to the downside, all right? Currency like CHF, JPY, was expected to do what? To drop last week. But what happened instead was we got a decent range-like bullish channel on Sweden. And that kind of just, that is why some people don't believe in fundamentals. Like, it doesn't make sense to them. They rather just stick to technicals, which they kind of just can relate with. And I really don't blame people for something like that because sometimes trading can be very complicated, okay? Especially when you're dealing with safe haven assets as ridiculously strong as Swiss, okay? When you have a currency pair like Switzerland, okay, Swiss franc, excuse me, it is horrible to be able to predict how it's going to play out or what's going to happen with its counterpart or with its fellow pair. Okay, maybe it's paired with Kiwi or it's paired with Aussie, it's paired with Yen, dollar, pound, card. It's very hard to kind of like wrap your head around it. Like, how is it going to play out? But at the end of the day, you still have to trade it unless you want to avoid it. The same thing goes to Euro pound. Okay, it has no serious momentum. It ranges most of the time. Okay, but you still have to trade pairs like this. So what happened last week was I was personally buying. We're going to come back to this currency, but let's talk about Swiss, dollar Swiss. Okay, I was particularly buying dollar Swiss because I've got some very, very decent momentum on it. Okay, starting from this inverted head and shoulder pattern that is very, very clear on the 4-hour time frame I was actually buying here, I took a buy here, and I took a buy here. And after a while, all right, when the market actually rested a little bit, okay, I would say that I was expecting, when the market opened on Monday, right, and we got this massive drop on Friday last week, I got this entry. I took a buy. Okay, the market rallied a little bit and then it started falling. You can see we have Tuesday, Wednesday, Thursday, and Friday right here. Although I took a very short buy right here, but I still don't believe in this particular trade. And why is that? Let's go back to the bigger time frame, which is the weekly band. All right, when you take a look at the weekly band, since 2008, I believe, let it load up. It's gonna load. All right, since 2008, yes, 2006. Okay, based on how long this particular currency pair from this particular broker, which is Forex Transform, on TradingView, this is the data that we are supplied with, 2006. You will notice that we've seen a wide drop in the price of what? Dollar Swiss. Okay, it has been in a constant bearish trajectory. Okay, it has been a constant bearish trajectory, and I mean we can't blame it on anybody. Okay, Swiss is a generally safe haven currency. The same thing with the greenback, but dollar is not as strong or as trusted as Switzerland. Okay, Swiss is as strong as both. I mean, when you look at it all time, okay, I mean all time, you see that it's as strong. It's regarded as gold. Okay, very strong, very decent, good to be held. So that is where we are on dollar Swiss. Although when you look at this on the technical perspective as well, I mean we've seen some very good momentum to the downside. You can see, and it ranges most of the time actually. Okay, most of the time it ranges. You can see it ranges more than it actually trends. Okay, it ranges more than it actually trends. It's a very wide pair. Okay, that's why I don't really trade it all the time as well, just once in a while. But in a very long time, we've seen this massive drop. And since the market broke below this particular support right here, support, we got it retested here. We've seen an intense push to the downside, okay, which you can even call something like, a bearish channel. So personally, I was expecting a bit of a rally back to the upside, probably to this region, or maybe back to this top before we get that decent push to the downside moving forward, because this is never going to change direction. Okay, it's probably going to reach for like another 3, 4, 5 years, okay, and then drop again, then reach for another 3, 4, 5 years, then drop again, and then reach another 3, 4, 5 years, then drop again. Okay, that is the trajectory we're getting right here. Nothing. Till the end of time, we're going to see some range, we're going to see some drop, we're going to see some range, we're going to see some drop. On dollar Swiss, it's as simple as that. On the weekly and the monthly time frame, it's always going to be bearish. All right, unless miraculous thing happen and dollar gains some massive strength, and probably Swiss ends up being the weakest link among the major currencies in the world. But as far as I'm concerned, I would rather just short dollar Swiss than buy it, and that is what leads me to this particular page again, guys. All right, when you look at stuff like this, you have to make decisions, okay? Because economy is fun, economy is good, but you can't trade economy. That's why you need to have a very big understanding of technical analysis as well, okay? Economy will help you put meanings to the market or put meanings to what is happening in the market currently, but technical is how you navigate through what you'll be able to understand from the economy. All right, so I took a buy on dollar Swiss a couple of times. Let's go to the 4-hour time frame real quickly. Okay, so on 4-hour time frame, I took a buy very, very early. I took a buy here, I took a buy here. This particular buy, this number 1, closed at the top here. This number 2, closed at the top here. I took another buy right here, number 3. I closed it right here. I think this was the one. If you check my previous video on dollar Swiss, this is the one I took, all right? Because it was ranging for a while. I took multiple trades before I got that massive rally, and then I took the profit out. The last one I took was right here. I took it around here. Actually, that's number 4. It rallied up, showed me out right here. I wait for the price to come back to this particular bottom, all right? It came back here. I took an entry here based on what? Based on these 3 candlesticks, okay? This particular morning star candlestick. And the moment I took the market, boom, closed me out at the bottom here. And then I waited again. I took a fresh buy around here again, but this was more like a very small entry because I didn't really get an entry. There's no candlestick pattern that suggests I entered the trade. So I kind of just take a very tiny entry. And then that one didn't play out well. The moment this particular support is broken, I closed it at the top bottom here. Very tiny trade. And then eventually I took a buy here. Okay, this is a short-term trade. I'm not even sure I've not actually closed this one because I was trading around 20 pips in profit, thereabout. So maybe that'll actually close out. So now, if I want to keep playing in this game of buy this guy, because it's better to even short it than to buy it. If you're selling pair like dollar Swiss, pound Swiss, you'll make more money than when you're buying it. It's always very slow when it comes to rallying. But when it comes to dumping, plummeting, you'll make better money selling them than buying them. Okay, and you can do your own research, back test the last 5-6 years. You see what I'm trying to say. Okay, so in my personal opinion, I'm gonna kick off with dollar Swiss, then we go back to top setup, then we come back to chat again. Dollar Swiss, personally, I'm still up for a buy, all right, because of the economy again. However, with the US government shutdown, there's a lot that needs to be considered with dollar Swiss. We have Swiss ridiculously strong as a safe haven currency. We have dollar with US government shutdown, US excessive spending, the labor data is still pretty weak, the inflation is still very sticky, the GDP growth is not tallying with what we are supposed to be getting with the economy. So in the United States, there's a lot of slippery slope, a lot of on a lot of questions is going on over there. Recession, you know, the AI stock market, the AI bubble, the stock market bubble, everything is bubbling and bubbling in the United States. So there's a lot, a lot that comes with the dollar. So the confidence is no more there. The support that dollar used to have with the investors is no more there. That's why we're getting those very serious strength flow into gold, flow into Switzerland, and some are also going into Japanese yen because those currencies have proven to be strong. And why? Because they are never really a currency that stand out in the face of the world. Okay, that's why people kind of trust them the most. They're like all those people that will lay back at the back of the class, but they are smart. All right, but they don't like the limelight. Dollar loves the limelight. That is why it is dollar. All right, but pair like Swiss, pair like yen, they like to just lay back and get in touch with those investors that invested them. They owe them much more than they do dollar right now. So, in my personal opinion, I would say buying dollar Swede is still in play, but I will take it with very cautious mindset, or I will take it cautiously, something like that. Okay, I'm not going to rush into this because there is a lot that is still going on with the United States economy. So that's it. Let's come to the top setup right here. Or let's even take a look at the US economic heat map. I mean, everything is still the same. Nothing has changed so far because we are still stuck with this word, the US government shutdown. So averagely, the stock market is still very strong and the currency is still slightly strong. Okay, I'm talking about the dollar. But we are still not going to be certain until the shutdown is over. So that is all I have for you on the US dollar economic heat map platform. So moving forward, guys, on the top setup right here, we have the US dollar card. Okay, we have the U card, still very bullish, score of 10. I'm very bullish on this one as well. I would love to buy because it's a pair that is not as crazy as dollar Swede. Okay, I would love to buy dollar card. So that's that. Pound card, I would love to buy pound card. It's actually ready to be taken. Nasdaq, I think I am buying Dow Jones and not Nasdaq. Okay, but I'm buying Dow Jones anyways. Bullish score of 6. That's good. Nasdaq, I would really love to see a pullback and I will probably add to my trade on Nasdaq. S&P 500, the same thing. If we get a pullback, I will have to the position. And pound Aussie, I closed my order buy on this one last week, but I wouldn't mind joining again. Platinum, we have bullish reading. I'm expecting a pullback on platinum. Now, platinum dropped the same way gold and silver dropped last week. So if I can get a more decent drop on platinum, I might look for buy opportunity come next week. So watch out for that one. Now, Hero GBP. Hero GBP is awful, annoying, ridiculous, but I'm selling it regardless. So you have to watch out for that one as well. Okay, it is not the best trade in my personal opinion. As a matter of fact, I don't like it. Okay, but in time like this, you'll have to go for it. I mean, when there's no serious trade, okay, I don't want to sit down without doing it. So I just took the trade with a very, very small risk. Okay, so far so good. Now let's start with DXY. Now, I'm going to introduce you guys to something very important today, okay, which is not DXY. Today we're going to talk about the dollar itself, okay? The dollar, when it's being paired with the remaining currencies, okay? Right here you can see we have dollar euro, we have dollar Swede, we have dollar CAD, dollar pound, dollar yen, dollar Kiwi, dollar Aussie, all right? So this is the average of all those numbers, and it gives us the actual value or the actual price of the dollar. It is more like the indices of the major currencies themselves. Okay, so this is what we have right here. As you can see right here on the dollar itself, it is bearish. All right, we've seen these even on DXY. Okay, if I should change the format of this chart, you will see that we have DXY at the bottom here. Okay, you can see this is our almighty DXY, and you can see it's awfully bearish as well. Right, it is still very much bearish, staying at this particular, staying below 100 region right there. Okay, ranging. The same thing is happening on this particular one. The reason why I'm bringing this up per se is because I particularly like the dollar, this particular dollar price in and of itself, other than DXY, because I can easily see the momentum happening inside this particular range. Okay, that is stuck at 305. Okay, I'm still very, very much bearish on the dollar, and I won't trust it. Okay, although last week Friday on DXY, let's go back to DXY that we're all popularly love. I mean, we're all used to. Okay, we got a break above this particular region last week, which is around that 96, 97 region. Then the market torpedoed back down. Okay, retesting the 61.8 Fibonacci. And on Friday, we saw this gigantic bullish candle on the dollar index. Now, do I want to start buying dollar from there? I'm not going to trust that. Believe me, I don't. Okay, but I really want to trust the dollar, the bullish momentum, considering the shutdown and factoring the labor data that is still pretty weak. And the Fed, Waller last week said there's a high possibility of cutting interest rate. Cutting interest rate. So, and also Powell said it in the last FOMC meeting. So technically, the dollar is not looking very good in my opinion. Okay, and the shutdown is not really helping the matter at all. So right now, I am just gonna sit down and watch out on this one for now. Come next week when you're planning on DXY. All right. Personally, I would really wait for another daily candle that closes above here. Okay, let me actually make it a bit bigger. Good. So come next week, I would rather wait for another daily candle that close above this particular low. I mean, above this particular, I think should be Thursday bearish candle, right? So if you get a candle that closes above this candle, then I would consider a bullish rally on DXY, heading to 100. All right. So that is just where I'm at right now on the dollar index itself. All right. I mean the dollar index. Okay. So I would want this particular high to get broken, maybe a 15 to 1 hour time frame pullback. Then we cannot wait for a continuation of this particular bullish momentum. All right, all the way to the upside. The same thing goes for this particular currency itself, the dollar itself. Okay. On this one, you can see the range is actually more decent over here. Okay, we have resistance, we have support. Okay, very basic. A break above here, a decent pullback would really help in seeing if we can get dollar back to 380 region right there. Okay, but for now, I'm just kind of like chill on the dollar for now and see how it goes. Okay, moving forward. So that's just where I'm at on the dollar. Okay, now let's talk about my trade. The open trade, the trade I have going on right now. I would start with the US30, which is the Dow Jones. Okay, on Dow, I'm currently buying Dow right here. I took a buy on Sunday, and so far it looks decent. However, this is a very small entry. Okay, it's a low risk entry because I still want to buy Dow pretty cheaper, maybe around here. But I'm not sure if we're gonna get that. But if we do, I would really love to get that, even if it's gonna come back to this particular demand zone right here, or maybe here. All right, or maybe here. Okay, I would love to buy. I just want to buy cheap. Okay, then maybe we can get it for the rally on the US30. Okay, the bubble or no bubble involved. You get what I'm trying to say. So that's just where I'm out on US30. I'm buying, but I wouldn't mind getting into another buy at a more cheaper price moving forward. Okay, so let's watch out. Okay, Euro GBP, I've been shorting with you for like 3 days now, and it's been very awful. Okay, like I said, it's a range pair right here. It's been ranging. We have a couple of support, couple of resistance, quite feasible on the 1 hour time frame. Okay, even on the far, it's not as feasible as, it's not as cool as anybody would want to trade it. All right, but if you let's check the 4 hour time frame, you can see it's not that cool on the 4 hour time frame either. It's just a big fat range right here. Okay, nothing super serious on it. All right. So on the 1 hour time frame, does it make sense? I think it will make a bit of sense there. I guess it doesn't really make so much sense either. It's a range. All right, nothing really makes sense in the range, in my personal opinion though. So I'm still watching this. I have a short trade on it, a sell trade, so to speak. So in my personal opinion, I would love to see a break below this particular support zone, a pullback, and then see if we can get it drop further down to the downside. All right, and I would really love to ride this at the back of a further dovish tone or dovish sentiment in the European economy. Right, I mean it has a role. It has so many rooms to go when it comes to the bearish side. Okay, to the downward part of the chart. So I would really love to add more position to this one and just ride with it. And don't forget, it's a high positive swap kind of trade. Okay, especially if you're shorting it. So I would really love to see. How this goes. I want to add more shorts to Euro GBP moving forward. So watch out for that. Excuse me for that. Aha. All right. So on Nikkei, so far so good. This is a buy trade I took on Nikkei last week. Okay. After this gap, we got last week Friday, the market dropped drastically. And then I was fortunate enough to take a buy around this particular region. Although last week Friday again, I'm talking about the Friday before last, that's when we got this massive dump. Okay. And last week, which is yesterday, Friday, okay, we got this pullback. So far, so good. I would still love to see Nikkei actually come back here for me to add to this buy, or probably even come down here for me to add to this buy. Okay. But for now, let's just watch how this Nikkei thing go. All right. On WTI so far, so good. Okay, we've seen WTI at this particular demand zone as well. Now, I said, so in a very long time, we've seen the market actually keep WTI above $50, okay, and below, let's say $65 or $75, so to speak, okay. So this is more like a range band, all right. We don't really need a crazy cheap fossil fuel or crazy cheap oil, and nobody actually wants an expensive oil as well, because it's going to cause a crazy, that will lead to a crazy inflation, which would probably cause another interest rate cut. I mean, nobody really wants that. So we need a moderate, well-priced, well-structured WTI. Okay, so far so good. And right here, we've seen that 55 region right here is the all year long, support that we've seen on the price of WTI since 2020. What is that? That should be 2021 right here that we got this particular support. All right. So since then, we've not really gotten any since then up until March this year, we've not seen 55 retested. So I'm just kind of like chilling and watching this particular asset play out and stay above 55 structure, because anything that makes it break below 55, this particular 55 region right here would consider to be leading into all the way. I mean, it will be considered very bearish. Okay, and a cheap oil means a whole lot to the US economy. It has a full impact on the labor data, especially on the inflation. Okay, so we have to watch out for this. Okay, because if it drops below 50 and we get a nice and decent pullback, I will be selling this and I will be holding it for a very, very long time. Okay, so watching out on this. If it doesn't break below this 55, and we see, okay, and then we end up seeing a cross above this particular structure, also this previous low right here. There is around that 58 region, okay, $58 per barrel on oil. I mean, we can end up seeing 71, 70, and maybe $72. All right, in the coming months. All right, so that is where I'm at on WTI right now. I'm just watching this very closely to see if we can actually get 71 region, or maybe the 55 support is going to get broken this time around, and it relates to a further downpour of, a further weakness in the price of WTI. So watch out on this. Currently, I'm buying, so I'm still holding that, but I will be trading this very carefully, and I would really add to the trade at the top here. Okay, that is where I would love to add on to the trade very well. Okay, but for now, that's a very small position right there, just to chill around. We've discussed USDCHF, so nothing much on that one again. And Aussie dollar is also something, it's another pair that I would really love to see some momentum returning back to in the coming days. Okay, since last year, November, all through till January, February this year, that was the last time we got some very good momentum. Okay, lower low, lower high, lower low, lower high. Since then, from March up until May, June, till August, we saw this range, and then we got it broken out, and then we got trapped inside this ridiculous bullish channel, and then again another range is forming up right now. So dollar has been messed up a long time. So, and that has affected most of the major pairs across board. So right now I'm just watching the major pair right now, and Aussie dollar, as much as I love to get into it, I'm just watching it for now because nothing kind of looks same on that particular currency pair for now. So watching out for that one. When the time is right, I would love to take a short trade at the bottom here. Once we get this particular resistance, turn support, we got it broken, and then it is used as resistance again, I would like to take another fresh shot on that. But for that to happen, we need a very strong dollar. Okay, failure to get a very strong dollar will lead to more range on all the major pairs moving forward. And so that is where I'm at on my open positions. Let's start with the Usdcad for trade entries and trade recommendation. As far as dollar card is concerned, I really want that pullback. Okay, you know what I'm talking about. This particular pullback, I need it. Okay, back to 61.8 Fibonacci, so I can take a better ride to the upside. And when you take a look at this very well, it range a lot, but it doesn't sleep on the range like that. Okay, unlike USDCHF that ranges crazily. This one, when it's moving to the upside, it moves really well. When it's dropping as well, it drops really well. So you can make money both sides, whether you're buying or you're selling. It's not like the one-sided currency that sells faster than it rises, like the pound Swiss, dollar Swiss, and the likes. So on dollar card, I am very, very comfortable buying this right around this particular resistance or support. So if you get this pullback, I would really love to take a buy moving forward. You can see we have higher high, higher low. The market range a little bit right here, and we get a fresh high right here. Now I need a low, then take a buy all the way to the upside. If that's possible, then we need a stronger momentum on the price of the dollar. Failure to get that will also affect this particular pair moving forward. So watch out for that. Pound card is the next pair I would like to talk about. Okay, again, pound card was very interesting. It broke above this resistance. Now, okay, this month-long resistance, I think that should be around April. Okay, April resistance. April, we have May right here. We have June. We have July. We have August. We have September. Okay, but what you notice right on pound card is that despite all of these, despite this particular range, we see that right inside the range, we have a momentum, a bullish momentum. Okay, a decent higher highs and higher lows. High, low, low, high, low, high, and low. We have a new high right here. So I just need this particular one to come back to 61.8 Fibonacci again, and then we see if we can get the market to rally all the way to the upside. Okay, so that's my take on pound card. I really have a long buy limit right here. Okay, and I'm really interested in this one. Okay, pound card. It will really be a very good one. That's if it plays out that we wanted it to. So the 1 ratio 3.5 is not bad. So watch out for pound card. It can as well go way higher. All right, but that would be a couple of months, a couple of 2, 3, 4 months like that. But overall, it's a very bullish pair, and it does pull back a lot, and it doesn't range like that. So I'm really comfortable and confident on this one. If I get an entry, definitely I'll be taking it. Nasdaq, again, I didn't get into this one because the market gapped up crazily, unlike Dow Jones that actually did pull back heavily the second day. So this one, I'm still watching it. If we get a pull back to this place, maybe, but I'd rather just buy at the bottom here. So I won't be buying this top, I'll be buying the bottom here on Nasdaq if I get an entry. Anything outside of that, I'll just watch Nasdaq go. Pound Aussie, another one that I took a buy very early at this particular demand zone. We rallied to this region, I closed the trade, and then the second day it dropped crazily to the downside right here, which I don't feel comfortable taking again. Now the market is around this region. I would love to pull back so I can buy. You understand? This is the trajectory of pound Aussie that I want to see. Okay, it dropped to the downside right here. I'll take a buy here, rally to the upside, break above this insistent resistance region. Okay, you can see this resistance has been there for a very long time. So if we break above this resistance, turn it to support, I will buy again at the top here. Failure to do that, I might just take this buy and close the trade at the top here. Maybe it's going to drop again. I'm not sure I'll be selling though, but we'll see how it goes. But pound Aussie, I'm pretty bullish on it, so watch out if you're interested. Platinum, don't forget on platinum, I said it fell the same way gold fell last week, Friday. All right, because we are in averagely weekend, during the weekend, we don't even know if we can classify weekend as the previous week or as a new week. We shall know we're in the weekend. So I'm going to call yesterday, which is Friday, last week. So you should know what I'm trying. When I remember last week, it's Friday. So don't mistake it for upper week. Okay, so moving forward, platinum, I want to see a pullback. Okay, a deeper one back to this region, then I'll buy platinum. Okay, it looks very good on the daily band. Okay, it looks very decent, although it also ranges a lot. Okay, and this is a very massive and crazy range. But when you take this to the 4-hour time frame, definitely you get some very good trade on it. All right, but you just have to be trailing this kind of assets very well. All right, so you don't get tapped out, because if you short here, you want to take some profit. If not, all your profit will just get taken out at the top here, and then the market started falling, the first started ranging, which is very awful. All right, but if you know how to trail professionally, you can easily just, you know how to draw structures. You can sell here, you can sell here, and you can even sell here. As a matter of fact, you can sell again at the top here. So far, it doesn't break above here, and it doesn't cross above here. It is still it's good for itself. And if you're the kind of person that loves to play in the range, you can buy here, you can buy here, you can buy here. I mean, this one is too deep, in my opinion. But you can buy, all right. You can buy all the support and sell all the resistance. You know, just have fun with the range, especially a range on the daily time frame. Yeah, sign me up. I will take it. All right. But it's just awful in my personal opinion. It's just very awful. You can see right there. But since I guess April, it's been very bullish. Okay, so I would love to see a bigger drop than a faster rally to the upside. Don't forget this does a pullback. I mean, you can even drop all the way back down to this particular demand zone, which I wouldn't mind buying from also. So watch out on platinum very, very well. Okay, so that said, let's jump straight to S&P 500. On S&P 500, very bullish. As a matter of fact, I wouldn't mind buying again. The same plan I had on Nasdaq, the same thing I will have on this one also. Buy and buy. Okay, on S&P 500, I want to buy. Okay, however, if you break below this particular region right here, then it's a whole different story. Okay, it's a whole different story. I wouldn't want to see a break below that 66145 region. I wouldn't want that. But if it happens, sure. See how it goes. Maybe I'll short. But for now, I'm buying. I mean, I'm not in the trade, but I'm looking forward to buy S&P 500. Pound MTD, I missed out on this one. I think I took a buy on this one. From here to here, I probably got taken out because of this pullback. Why I missed out on this one, which is very uncool. So right now, what is the plan on Pound MTD? Okay, we have a demand here. Maybe get a pull back to this region. Maybe I will take a buy moving forward. If we didn't get it back to this demand zone, maybe somewhere around this region. Okay, a buy from here and maybe a buy from here. All right, this two region, maybe. And eventually the market started to fall further to this region. I mean, we said I can buy from there too. But I'm not sure if it is after I've taken this that the market will drop further, and I have to buy this and then will drop further. I have to buy this. But personally, I'm watching out. For me, I would say this is my A+ setup, and this will be an extra A+. But this one, I would probably use a very tiny position size to take the trade. And I'm going to trick it on my other account, not the major account, okay? Just in case it doesn't make sense. And if it does make sense, it's fine. I don't mind missing out on it anyways. I mean, I don't care missing out on trades. If it doesn't come my way, it doesn't come my way, period. I'll miss it and move on. All right. So before I go, let's talk about gold, silver, Bitcoin, and a few other currency pairs, and we go. I will leave you alone. So silver came back to this particular demand zone. This demand is more obvious or more clear on the 1 hour time frame. Okay, as you can see right there, it looks awesome. All right, on the 1 hour time frame, you might want to take a buy on silver and gold. Okay, you can see right here. So maybe around here, and I'll buy next week. Silver, still very bullish. All right, but if it cross the low here, then I would probably take a short term sell all the way back down to 47.70. Okay, on silver. So that would be that on silver, because there's a very decent demand around this 47.60 region, 47.70, 60, and I think 40 region. This is everything I encapsulate. Okay, it's a very solid region on the 4 hour time frame. But when you're taking it on the 1 hour time frame, you can just plan for between 47.40 and 47. I mean, between 47.80 and 47.40. Okay, that is just where I'm at right now on this one. Let me actually make that make sense. You understand? 47.80 to 47.40. That's where you want to take a buy at the bottom here. But right here, it already looks good for a buy. I took a buy on gold before New York closed last week Friday, which is yesterday again, and I made a very good profit on it. So, and this is the gold trade I took. So let's watch out for this. Okay, I came back to this particular region. Yeah, I took a buy very early on 15 minutes, on 5 minute time frame, and I clicked on top here. Now, the plan is still plain and simple. Okay, if you get a slight pullback, I'm out of the position, and we'll see how it goes to the upside. Okay, if that is not the case, maybe it's going to come all the way back down to this particular region again. All right, it's also very possible that should be 4,100 region, 4,100. Okay, maybe you're going to push to this particular region and maybe buy from there. And if that's not the case, 39.90 right here is also up for grab. Okay, maybe we're going to get, there's so many demand zones that buyers can come in on gold and silver. So just watch out. Although right now on gold, I'm still very much targeting 4,400. Okay, so I'm buying here all the way back to 4,400. If the market dip further to 4,100, I will still buy from there to 4,400. If the market ends up dipping further to 39.90, I will still buy all the way to the upside. Okay, but if 39.90 got broken, then we might be officially bearish on the short term on gold. So be careful, be cautious out there. Gold is still very bullish. All right, very, very bullish. So don't let RSI lie to you. Don't let anything lie to you. You can see right there on gold, we have a very decent demand zones. Okay, you can buy from here, 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 you can buy from here. All right, so it's a lot. Every demand zone right there, there is a potential buyer ready to buy. So watch out. Okay, I'm not saying you cannot sell at every demand zone that was broken. You can sell, and this one also broken, you can sell. If this one also broken, you can sell. If this one also broken, you can sell. But you don't want to sell because some RSI is telling you to sell because the market is showing overbought, or you want to sell because you think that is the top. No, you want to sell this at every demand break. Okay, if the demand is broken and retested, that's a chance for you to short sell to the next major demand. Don't sell and you're looking for your target at 3,000. It might be wrong, it might be a mistake. Okay, so watch out. The same way nobody knows that gold is going to fly all the way from 32.40, and we're going to be seeing it at 43.80. Nobody knew it's going to get to 43.80. Everybody's just forecasting. But we saw it there, right? We saw it right above at 43.80. So right now, nobody knows if it's going to come back to 3,000, or it's going to come back to 3,500, or it's going to come back to 2,500. Anybody that is telling you all of that is lying to you. Nobody knows. Just watch out. Every demand break, sell and target the next demand. Another demand break, sell and target the next demand. You can see how the gold market moves. It moves to the upside, pull back slightly, move to the upside, pull back slightly, move to the upside, pull back slightly, move to the upside. Not the upside, the upside, excuse me. Move to the upside and pull back slightly. The momentum is clean, clear, and directional. That's the same thing you want to do when you want to sell. Move to the downside, pull back slightly, move to the downside, pull back slightly, move to the downside, pull back slightly. Okay, you don't want to sell because some guys told you on Telegram that gold is going to crash. You are on your own if you do that. That's just my 2 cents. Okay. On Bitcoin did very crazy last week. I think last week, Thursday, Friday, thereabout. Okay, I was buying from here. I was buying Bitcoin from here. I took some very good profits right here. When it came down again, I bought again. I took some very good profit. And it came down here, I bought. Then that one was not good. All right. So on Thursday, I took a loss on Bitcoin. It was very fair. But then right now, I'm waiting for a better push to the downside right here. Maybe another 101K. Okay, if I get 101K on Bitcoin, maybe we're gonna get a demand. A better demand zone that could lead to a further rally on Bitcoin. Okay, in my personal opinion, let's go back to daily time frame. I think it's much clearer there. Yeah, that's what I thought. So maybe around this particular region, 100K region, you can see we have some very good support here that have acted over time. Okay, in May, in June, and in July, we have this particular support right there. Very good, very nice. Maybe we're gonna get it the same thing right here in November, October, and then we're gonna just see the market rally back to a fresh new all-time high. Or maybe just going to break it to the downside, pull back, and then based on what has been going around right now, that you might get to see Bitcoin at 70K, 65K. I even read something last during the after the market has closed last week Friday, which is yesterday again, that we can see Bitcoin at 26K. I mean, that's ridiculous, but it's possible. All right, it's ridiculous to even think about as an investor because I don't want that to happen. But at the same time, I'm not in the business of lying to myself because it is very possible. So let's watch out. Okay, if we break below 100K, yeah, you can bet that he's heading back to 88,000, 70,000, thereabout. Okay, from 80,000 to 70,000 is up for grabs. You can see the layer of demand right here. Okay, that's how crazy I'm expecting it to drop. Okay, if it crossed below 100K, so great. that it doesn't cross below 100k, because if it does, there is at least 75% chance that it's going to touch 80 to 70k in the next couple of weeks. So watch out and cross your finger for Bitcoin. Now moving on to Euro USD. They have spent quite a long time already. So Euro dollar proved to be, stubborn a little bit last week. But right now, if I'm going to short Euro dollar, okay, if I'm going to short Euro USD, I would say that I want to see it right at the top here. Okay, and this particular supply zone, that's where I'll be looking to short Euro dollar again. Maybe back to this demand zone, all right, which is at 1.1560, all right, 1.1560. Maybe we get it back there, it would be nice and decent to take a buy on Euro dollar. However, failure to do that, okay, I mean failure for this particular demand to hold, meaning we can easily get it broken, and I mean it is Christmas for Euro dollar, all the way to the downside, all the way to the downside, all the way to the downside. The same plan we had on gold earlier, right? So just watch out for this, okay? Watch out for this. But I would personally love to sell right at the top here. Failure to do that, I'll wait for you at the bottom here to sell, okay? Did I sell here or I sell right here? Well then, dollar has to be strong. If dollar failed to be strong, then it's all messed up, right? It's all messed up. So let's watch out very carefully. On pound dollar, which is the last one I'm going to be talking about today. This one is ranging. I really don't fancy it like that, but I have the same plan that I just explained. I just discussed to you. With you on Euro dollar, I wouldn't mind the retest of this particular supply zone, and then we get it back down here. Again, we have a very strong support region right here, so watch out for that. If you fail to hold as well, a break above a pullback, I mean, it is Christmas for pound also. We have a demand here, but I'm not counting that we hold, because I want to sell this all through this year. Okay, I want to sell it. That's what I'm saying. It's Christmas, right? I'm going to sell it to November, December. I'm just going to enjoy selling pound dollar. But let's just watch out, because this range at the top here is an accumulation, and I want it to accumulate as much as possible, so that when it's ready to drop, it drops well and fine. Okay, so we can all make money together. So let's watch out, because before it rose the last time, okay, when was the last time it ranged? This one doesn't really range like that. But let's go back a little bit to see when the last time it ranged. It doesn't really range like that. So let's just watch out. Okay, this range is going to be very, very productive in the coming days. So watch out. However, if I'm going to buy this one also, buy from the bottom here. See if it's going to come back to 3900, excuse me. And if that failed to hold it, then we're going back to 2021 high at the top here, which is 1.4250. Okay, at the top here. So let's watch out. Okay, I mean, finger crossed on all of the major pairs. Why? Because we need a stronger dollar or a weaker dollar. Whatever the case may be, when the time is right, we're going to come here, we're going to discuss again, and we're going to plan it out. But right now, it's not the time to be going heavy on the trade. Let's watch out. Let's be patient. When the time is right, the market is going to show us where it wants to go, and we're going to follow it decently. Guys, I will see you in the next one. Don't forget to subscribe to my channel. Don't forget to follow me. I wish you all the best in this week. Have a good one. Bye for now.